Good afternoon. Thank you for joining us today. I would like to start by thanking EDCO for once again putting on a phenomenal event for our community. And I would also like to thank US Bank as a sponsor and Tonya Bernardy personally for joining me in this presentation. We're going to talk about safeguarding your success and protecting your business from fraud. I want to start by talking about the concept of the fraud triangle and the cost of fraud to organizations. Anyone here heard of the fraud triangle? I saw one hand. That's fantastic. So the fraud triangle is made up of three components, and these are the components that drive people to commit fraud. The first one is pressure. Pressure might be something like your spouse lost their job, or perhaps you have some sort of gambling addiction. Rationalization would include things like, I don't make enough money, I'm just going to take a little to make myself whole. Or, my organization makes so much money, they won't miss this teeny little bit. And the third component of the fraud triangle is opportunity. Opportunity means that there's a lack of strong internal controls at the organization, and so there's an opportunity there for a malactor to take advantage of. Now, if you were a business owner or executive, which of these three factors do you think you might be able to influence? Anyone? Opportunity. I heard a couple folks say opportunity. That's the right answer. So we're going to talk a little bit today about how you limit that opportunity. And so as you already noticed, I'm specifically speaking to occupational fraud. Tonya will be speaking to banking and payment fraud. So what is occupational fraud? Occupational fraud is the way that one might use their occupation for their own personal enrichment. And the three ways that that is done include asset misappropriation, corruption, and financial statement fraud. And you'll see on here, the number I want you to focus on is that CFEs, which are certified fraud examiners, estimate that organizations lose 5% of their annual revenue to fraud a year. So I want you to do the math in your head, or maybe if you're a smaller entity, think about what that could look like for a big organization. What is 5% of your annual gross revenue? And how would you rather invest those dollars? Rather than having somebody steal those dollars from you, would you not rather invest those dollars in talent, technology, maybe a new manufacturing line? So you can imagine that there's way better ways to spend that money. So what do we do? How do we stop people from stealing from us? I'm going to talk about internal controls. So what are internal controls? That's a nebulous concept a lot of people aren't familiar with. The definition that I like is that internal controls are the mechanisms, rules, and procedures implemented by a company to ensure the integrity of financial and accounting information, promote accountability, and prevent fraud. And there are 5 components to internal control. You'll see those on my slide. But what I want to talk about is what are preventative controls and what are detective controls, because all internal controls fall into one of those 2 categories. And preventative controls are the activities that are intended to deter errors and fraud from happening in the first place. So examples of preventative controls would include segregation of duties, having approval processes, and limiting physical access to assets, especially cash. Detective control activities, on the other hand, are backup procedures that are designed to catch items or events that have been missed by those preventative controls. So examples of detective controls would be bank reconciliations and perhaps having an external review or audit every year. I also want to touch on tone at the top. We might not think of tone at the top as an internal control, but it is. When we have leadership and management who prioritize honesty and high ethical standards, that helps to protect the organization from fraud. What is trust in all of this? Trust is not an internal control. And if the only thing you learn from me today is that, you have learned a lot. You have learned a great lesson. When we catch people committing fraud, one of the first things we hear from others is that they trusted that person. So I want you to think about how you would feel if a family member in your business, if a friend who you were in business with, or even a long-tenured team member were to steal from you because you gave them that opportunity by not having a strong internal control environment. How would you feel? I'm going to talk now about one mechanism to help reduce your risk. So I'm going to talk about how to read a financial statement. And this is going to be brief, but there are 3 basic financial statements. There's the balance sheet, which is always a snapshot in time. There's the income statement, which gives you a look at profitability over a period of time. And then there is the cash flow statement. If there's one you don't want to pay attention to, let it be the cash flow statement. Very few people understand them. They're very confusing. Focus on the balance sheet and the income statement, and that can give you a pretty complete story. So I brought for you today some examples of what I would call an ineffective income statement and a good income statement. In the interest of time, I'm not going to present a balance sheet, but you see here, this is a profit and loss statement. It has been anonymized. You can see that I've highlighted in red boxes some things that catch my eye as being quite concerning. The first line item at the very top of their revenue section is uncategorized income. And it's about $500,000. It's about 20% of their annual revenue. Actually, this is 9 months, but you get the point. It's a big number, and that number should always be 0. There should never be something called uncategorized revenue. This entity also has government grants. This concerns me because, one, reliance on government grants can be unsustainable. Also, I'm seeing some sloppy accounting processes and procedures here, and when you receive a government grant, you have a very high standard for reporting back on those dollars, as you should. And so if you're doing a poor job with your accounting in general, how do I have confidence that you're accurately able to track your grant dollars? This is what I would call a very good income statement. I like it because it's trended by month. If you're looking at financial statements and you see an income statement that is trended by month, it is so much easier for you as a business owner or executive to see anomalies and to understand where you should be asking questions. And then here's my expense side of the income statement where I show you the things I don't like. So right up front and center again is this uncategorized expenses of $46,000. What is that? Why are we 9 months into the year and we don't know what we did with $46,000? That's alarming. I also have highlighted on here professional services. You'll see they account for $600,000 and their payroll expenses are only just shy of $400,000. That's unusual. I have questions about that. In this organization, it's actually fine. I know that because I know this organization, but it's something to question. Additionally, travel expenses of $82,000 9 months through the year gave me pause. It seemed pretty high, again, in relation to the payroll expenses. So I asked questions, and as it turns out, it was fine. But these are kind of the things that you need to understand about your organization so you know when to ask questions. I did have a few other issues on this particular set of financials. On this income statement, there's no meals and entertainment expense. That's a bigger issue when we have 50% deductibility than when we have 100% deductibility for tax purposes. This entity happens to be a nonprofit, so it's not going to impact them, but I see over and over for-profit entities that aren't tracking their meals and entertainment expense separately, and that concerns me. Taken as a whole, this set of financial statements gave me a general sense that the accounting efforts are sloppy at best. And so when you encounter financial statements that seem sloppy, the question that you need to have in your head is this simple incompetence? If so, let's fix that. Or is this malfeasance? Is there something nefarious going on here? And then lastly, on the financial statements, I really prefer to see a comparative set of financial statements. So I want to see 2 years compared to each other. It gives me a good way to highlight if something is really changed from year to year. It can identify areas where I need to ask questions. And then here's what I would call a very nice looking expense side of the income statement. Again, we're trended by month, things make sense. I look at that and it meets my expectations and it matches the narrative that I have about my business. So I feel good about it. This is my final slide, so I'm going to talk to you really briefly about some other things that I think are important for identifying and preventing fraud. Of course, I'm here presenting with US Bank, so I would be remiss if I didn't speak a little bit about bank fraud as well. So I want you all to reach out to your bank and have a conversation with them. They have fraud mitigation products. Tonya will get into that further. They have services they can provide you, and they can tell you what best practices are if you're not already aware. They can help you design your bank account structure so that if fraud were to happen, they can help you mitigate your losses. And then all caps, different color, know your banker. This is so important. And again, Tonya will speak to some of the phishing schemes that are out there where you want to know who to call if somebody contacts you. And if you just know your bank name, but you've never met a person there, you're making a mistake. So I want to talk a little bit more, too, about how I work with my clients as a fractional CFO and forensic accountant when I want to help them understand what's going on. And I want to gain an understanding of their internal control environment and how accurate their financial reporting might be. So one of my first questions is, do you have a monthly close checklist? Are you using it? Or is it just on a shelf somewhere? Is it working well? What good is a checklist that's intended to help you prevent fraud if it's not working for you? Let's fix it. Let's make it work for you. Do you close the month in QuickBooks Online? Most small businesses are on QuickBooks Online. Do you close the month? Do you use that functionality every single month in your business? And if you don't, do you understand the risks that you're taking? If I were a bad actor and I had access to your QuickBooks and I wanted to run fraudulent transactions through, and I knew you're running comparative financials and you're looking at the past 2 years, where would I put the fraud? 3, 4, 10 years ago. Would you catch it? Close your month. Keep your books tight. Know what's going on. Budgeting. Are you preparing an annual budget? And are you comparing your actual results back to that budget and asking questions? Why was this line item of revenue higher or lower than we expected? Did something happen? There might be great answers. I want you to understand those answers. And finally, financial statement review. That's why we went through a set of financials together. Do you know what you're looking at? Let's start there. Does it tell an accurate narrative on your business? Do you have the familiarity with your financial statements such that you would recognize errors and anomalies? These are all questions that I want everybody here to think about as a business owner, as an executive, because these are some of the tools to help you safeguard your business from fraud. And that's all I've got. I will be turning it over to Tonya now.
Thank you. Oh, okay. So why is banking fraud increasing? Digital banking growth, so more online activities means that there's more fraud options. We've all seen the pop-ups, we've all been exposed to those things. Pandemic shift, the big shift to e-commerce. During the pandemic, a lot of entities went to primarily online or shifting to part of their business online. That has been an increase in digital vulnerabilities. Remote work risk. When you have remote workers, there's risk on those home bases where the network might be unsecured, and reduced oversight has made fraud a lot easier. Low risk, high reward. Fraudsters can operate anonymously with minimal consequences or no consequences. Scams are becoming much more advanced. Phishing, credential theft, so the advanced scams are really taking over. Weak business defense. Small businesses often lack the controls internally, and the teams to be able to manage those controls. Faster payments. I'm going to be touching on this quite a bit in my presentation, but the faster the payment, the less likelihood of recovering those funds, and fraudsters know this. So what are some additional frauds that we see with our businesses? And I'm sure that each of you have been exposed to one thing or another on this list. So the business email compromise, impersonation via email to redirect payments, account takeover, the criminal gains access to accounts using false credentials, or stolen credentials, excuse me. Phishing and social engineering, fake communication to steal login information on sensitive data, ACH and wire transfer fraud, fraudulent transactions via electronic funds using fraudulent instructions. Check fraud, this is an old one and a common one. Counterfeit, altered, forged checks are targeting business accounts. New account fraud, fraudulent openings using stolen or synthetic information. Impersonation scams, again, criminals pose as bank reps or vendors to solicit payments. And last but not least, we do see sensitivity with ransomware and malware, encryption on business data, and demand ransom. So as I mentioned, checks are a gateway to fraud. That information is sensitive. Your full account information is on that detail when you send it out. So fraudsters really target checks. So again, checks remain the major threat, even though there are digital scams. 65% of organizations have been impacted by check fraud. Fraudsters are targeting the blue box, so as you see, you're putting mail in the post office box, and fraudsters are targeting those. And again, fraudsters continue to alter checks that are stolen, washed, changing payee information, changing dollar amounts. So what are some of the tools and some of the ways that you can protect yourself from paper fraud, check fraud? There's a suite of positive pay services that would give you opportunity in order to do that. Positive pay, payee positive pay, is a method in informing your bank on the checks that you have that are outstanding. And as those checks are clearing, that your financial institution is looking for the check number, the dollar amount, and the payee information. Reverse positive pay, this is an amazing product for companies that don't have the ability to upload those checks or to inform the bank, and those items are approved as they're clearing. Controlled disbursement accounts, it's really not a fraud prevention tool. However, you do see organizations that use this as an opportunity to control any checks that are being paid. So as checks are clearing, you have the ability to fund those checks as they're going out. Additional controls, just some final thoughts on positive pay or fraud prevention for checks is really just managing your dual controls, making sure you know who has access, monitoring your exception reports, act promptly. There's an option typically in positive pay in those tools that you can pay all, don't pay all. That's kind of defeats the purpose of that tool. Electronic fraud types, so the first two really go hand in hand, ACH fraud and real-time payment fraud. But really it's unauthorized debits by stolen or malicious actors. The use of the check information, as I mentioned earlier, is used to debit those accounts. We see a lot of businesses being impacted with vendor impersonation, social engineering. So you receive a fake invoice, it's redirecting payments. Debit card fraud. Oftentimes, organizations will think it's easier to issue debit cards, and to add those layers and controls, we recommend organizations consider credit cards. So what are some ways that you can protect your organization with electronic fraud? There are several. There's a lot here, but ACH positive pay, so again, just allowing certain organizations or companies to debit your account. And the controls are really in your hands, so you can set limits. If you know an organization is set to pull 5,000 and no more than 5,000, you can set those controls in place. ACH block. If you have an account that you know does not have any electronic debits that will be coming out of that account, an ACH block is ideal. An ACH filter is very similar to ACH positive pay, but the bank typically manages that service. And basically, again, approved company IDs, approved businesses that are allowed to pull funds. Account validation. So as you do see, organizations do see those malicious invoices redirecting payments, account validation allows you to confirm who you're sending those funds to and really authorize and approve to avoid any errors or fraud. And this one's always my favorite. It's a universal payment identification code, UPIC. And essentially what it does is it allows you to provide a masked account number if you do expect to receive funds where you're not providing your true account information. And again, some best practices are to maintain and update approved vendor lists, set transaction limits, make sure you have those controls in place, and use layered controls with other fraud prevention tools. So some final thoughts, just in getting to the closing here, but regularly review information reporting via your online banking platform. Stay ahead of it. Don't wait until the end of the month to review. Catch those things as quickly as possible. Definitely leverage electronic fraud prevention services and automation and flag suspicious activity. Establish and follow procedures for processing money movement. And this kind of goes with the next line. So again, if you do receive an invoice from a vendor, call the person that you are connected to. Call your contact. Don't rely on the information that you're receiving in order to redirect payment. Oftentimes, fraudsters are really good at copying information, copying tone, to make it seem like it's a legitimate request. Call your contact. This is a big one, employee dual authorizations. So what that means is if you are sending funds out electronically, make sure you have 2 sets of eyes on funds going out. It's a best practice. It really does protect your organization, but it also is a catch if there is a fraudulent invoice that you could potentially be sending out. Never access banking platforms through Google search or search engines. Always bookmark, go to your financial institution page. Educate your employees. Make sure they know what your procedures are. Make sure that they know that your financial institution is never going to call and ask for credentials. They're never going to ask you to log in and download an app. Make sure your employees know that if they do get a call from your financial institution, that you're calling your banker. Use alerts, notifications. Just make sure that you're staying up to date and informed if you do have tools in place. And employ best practices for internal controls. Do a checklist. Make sure that you are checking your internal controls often. And this is really important. Your financial institution does not assume responsibility for resulting in unauthorized activity or fraudulent activity. So this is really important for you to remember, and this is why it's also really important for you to safeguard your accounts. And last but not least, as Jessica mentioned here earlier, know your banker. If you do have any questions or any of these things do pop up, know who your contact is. Give them a call, ask them the questions. If you are receiving information from your financial institution that doesn't make sense, that you need clarification on, don't rely on the person calling you. Call your banker, know who that person is, establish that relationship if you do not have one. And that's all. Thank you.
Thank you, Tonya and Jessica. This is so helpful. As a matter of fact, as I was listening to your presentation, I got a fraud alert. Someone in South Dakota got Botox on my account, and
Yep.
how could this have happened at this very moment? So I appreciate so much what you had to share. We do have questions available for Jessica and for Tonya. I have a question. So is there any sort of like insurance that people can have for their business if something like this pops up?
Did Travis pay you off?
I'm a plant.
You're a plant. So I'll just jump in and add that, we do recommend that any organization we're working with does touch base with their insurance company to see what options they have available to them for business insurance.
I promise, Travis didn't ask me to ask that, but you're right, it really did come together. Okay, our code is 22453-815. This is your chance to ask Tonya and Jessica questions on fraudulent activity. There's an emotional component to the fraudulent activity, too, that happens for people. Can you speak to that?
Yeah, I've definitely seen that. I've actually been the CFO in an organization where my predecessor committed fraud, and the emotional impact lasts for years. The loss of trust and the feelings of betrayal. It's an incredibly emotional thing to go through. And then, even just on the banking end, where it's a little less personal, right? These people who are doing the banking fraud are totally anonymous. You still, I think, you're spending a lot of time to fix it on the back end, and that can be emotional because that's not your mission as a
that's
business.
Right. Yeah, I almost feel like it contributes to like social anxiety too. You're like,
Yeah.
ugh, I'm
It's
vulnerable
violating.
in a bad way, not the Brene Brown way, like in a bad way. Yeah, it's not good. Okay, I heard credit cards are safer to use online than debit cards, which you mentioned. Tonya, can you elaborate on that?
Yeah, that's a great question or comment. But absolutely, for a business organization, it is much safer to use a credit card over a debit card. The dispute process is different when you do have funds, that you are using funds online if there is a fraudulent event. So if you go to a website that is not protected, you're at risk. So if something happens and you're using a debit card over your credit card, again, as I mentioned, the dispute process is different, and you definitely have a different level of protection.
Yeah, that makes sense. How far will my bank, or U.S. Bank specifically, go to get my money back, and what won't they do? This is an interesting question.
Oh, that's a loaded question. I will say that we have an amazing fraud team. We have an amazing support team behind us, and U.S. Bank does everything that they can. Obviously there are certain things that happen on the front end that we have no control over. So where we do have control is how we can mitigate it on the back end, making sure that we're having conversations ahead of time so businesses are not in that situation.
Can you share any additional best practices for businesses that hold significant investment funds?
That's me. I would say to, again, know who your banker is, have a conversation with your banker. What is your financial plan? What is your investment policy? I think it really depends a lot on those things. So really having a good understanding. Not every business is going to be built the same. So really having that deep dive conversation with your banker and your team to make sure that you're diving into what that plan looks like. What is your expectation for the future?
And just speaking from the other side of that, I've been involved with different organizations where they might have significant investment dollars in a nonprofit environment, have an endowment, those kind of funds available to them, and you should have a strong audit and finance committee. That committee should be reporting to the board. That committee should also be meeting with the investment team on a quarterly basis to understand how they're invested. That committee would also be tasked with developing the investment policy and any changes that need to happen. So all of those things that Tonya said, and then those are some other ideas if you're on the board side of things.
Do you have any recommendations for best practices when sending wire instructions to investors, especially to avoid a bad actor impersonating the business and sending new fraudulent instructions?
That's a really great question, and there's a lot of layers to it, so I will walk through this the best I can. So again, knowing who you're sending funds to, confirming the legitimacy of that organization and that person. So that would be the first thing that I would highly recommend, is making sure that that is legitimate, the instructions are legitimate. Secondarily, what I would recommend for an organization is, if you are sending out instructions, have a separate account, have a receiving account, have a wire account. This way you are not compromising your operating account if you are sending out your account information to those investors.
So this is shockingly, many businesses don't have a P&L. How often do you see this in your collective work, the two of you? You see this pretty frequently?
Well, you should never see it, and I have seen it. So that is indeed shocking. I agree with whoever made that comment or asked that question. I see it, as you would expect, most often in privately held small businesses. You don't see that as often because you would never bank with an organization that didn't have a financial statement. Those are the people who should be calling me, though. This is something that we can help with.
That's a perfect answer. I love it so much. Well, thank you both, Tonya and Jessica, for being here. This has been really helpful in a short amount of time, and we appreciate you so much.
Thank you.